Ladies and gentlemen, sorry I couldn't record yesterday. It's my first day off in a long time. I'm back. I'm back to the one a days. It was just the computer messing up. Anyway, there's not a lot to break down tonight. There is one key thing that I did want to break down about these markets, what you should actually be on the lookout for, what it means for your weekend swings, and is the bottom in? And right now, who knows? But check this out. I mean, from here to gap down to here, descending it down 15%. This is 5 trading sessions. We went down 15%. That's almost a crash in itself. And then we recovered 14%. How wild is that? That's unreal. The S&P, the top 500 companies, is moving like Tesla. Anyway, last week we went 3 standard deviations. There was a 1% chance that was going to happen. 1. And we did. We did it. We haven't seen that kind of just blowout from the market makers in a while. A very long while. And right now we're outside 1 standard deviation, which should tell you a lot. Because this is what market makers, how they handicap their risk, how they price everything for the week. This is what they expect things to be inside this range. And to blow it out last week. Now what happens when we do that? They priced it in the next week. The volatility is here and you got to pay to play, which means if you're on that board, that minimum just grew. And to do that back to back, I draw these lines every Sunday. So watch this Sunday's video, this last Sunday. Watch the Sunday before. Watch how they get wider. We're pricing in that volatility. And even though we price it in, we are still outside. More than likely, I think we rein it back in. We're going to pull it back. We might just wither it down and bleed it off a little bit. We might just hit this top yellow zone. If I was going to go short the S&P, this next yellow zone up here would be where I go. Maybe I think we'll just pull it back, probably even make a bull flag. It's going to make for like an awkward weekend, like bull flag or reversal. They will look the same. Look at the NASDAQ, exact same story right here. Already kind of testing that zone. So we have CPI tomorrow, PPI the day after. So we have excuses to kind of move things around. But when we look at the expected moves, we're outside of both. 2 standard deviations on the Qs is 480. We're just shy. We're already at 1.5. If we are anywhere close to this, I mean 1.5, like I told my group, we can chalk that up to some last week jitters, kind of just still getting out of the system. Maybe we didn't price in enough. It's already pushing it for that kind of excuse. Anything below that, we're fighting over nothing if we're just above it. We go 3 standard deviations and then 2 or 3 standard deviations back to back. That volatility is nuts, and that tells me whether you're long or short, you better have your allocation dialed in, because that morning gap on Monday could be anything. Could be really in your favor, really not in your favor. So what I like to do is, like, when I buy shares, let's say I'm going to buy some at 466, but my stop loss is going to be 460. So that's $6 per share that I'm going to risk. So I'll take that $6 into how much I want to risk. Normally it's about $2,000 a trade. And that's how many shares I'll buy. And the market will look at a number like that and laugh at you Monday morning, because that gap could be well below. So if you managed your risk and planted your allocation that way, or planned it, for it to be like that, you're asking for trouble. Right now you need to dial it back, or you're just going to get hurt. Now, I sold all the puts that you guys... So we talked about this Sunday, right? I told you I'm not selling calls this week for this exact reason. I said the green candle will rival the red candle. When we get that rip your face off rally, that first initial surge is going to just make up for those red days. And the last thing I want to do is sell calls and be underwater. Now, I did change my mind and I did sell a Tesla put, and that's exactly what happened. I sold the 250 the 250 calls. And we're underwater. And so, essentially, I sold the 220 put, sold the 220 put, sold the 250 put, finally got my shares assigned, and then I sold the 250 call. So if I let it go, I still made thousands every week. I'm going to roll it, so it's going to be at least, 5 weeks of just, I call free internet money. But that's exactly why I said I'm not selling calls or anything else this week, because that's going to happen. But anyway, looking at all that, if the bottom is going to be in, then you need this to chill the F out. If this does not chill, the bottom's not in. The bottom's not in. We're just mid-earthquake. That's all. And we don't know where it's going. So honestly, if you're gonna take that risk, I would probably go short the S&P up here. Technically, right now, that did just cross. So that is a death cross on the S&P. That's the 50 crossing the 200. That is a very bearish signal for some. So if you could get that, now honestly, if we push up here, it might just be a head fake by the time that closes. It's a lagging indicator, so if you were to just hold account, you could be in trouble later. But that being said, I still am very much a buyer. When the market crashes, I'm a buyer. Market's down 20%, I'm buying something. Sadly, I just sold a bunch of puts. I bought them all back today, just because I collected all my money on them. There's no need to hold them anymore. I didn't really get to buy anything. I did actually, so I had the puts sold on the S&P, so that pushing up, we locked in the profit. I locked in the 560 puts that I bought for August, just shy of 100% on those plays as well. So if you follow that account, and if you guys ever want to, just check the top pinned comment down below to the Patreon link. So made a couple thousand on that. So as the market's selling off, we're making money from there. We're making money on bullish plays as the market's still selling off. So overall, pretty decent lesson. I think a lot of people got to watch of holding shares but still going short, hedging, what a hedge actually is supposed to look like. It's never a 1-to-1 ratio. There's no way the market goes down like this and your portfolio is just fine. If it is, then you're just not going to make money to the upside. That's just how it works. You want to go out of the money and let that put do the work. That's what makes up a lot. Then you take those profits and you buy the dip on other things. Anyway, I wanted to come on here, and that is just the main takeaway for today's video is just watching these expected moves right here. We need to rein it by all accounts. We need to rein it back in. It's going to be a red Thursday and Friday if we do, right? We bleed it out. Now, we could just send it up and then right back down. That's still the same. Friday's close. Is it above this line? Is it close to this line? Where are we at in the relation? This is wild. This is we're chilling out. And anything in between here is just going to be that knob of kind of where did we land? Which one are we closer to? So, 2 standard deviations on QQQ is $480. SPY puts you at 571, anywhere close to those numbers, and that's a cool story. We're sending it up. That's not a V-shaped recovery. We tied some shares to a SpaceX rocket and sent it. And just like SpaceX, we just don't know if that rocket's blowing up or not. So that's the best analogy I can give you, because it might just come right back down. The leading excuse is tariffs, and today there was a pause on tariffs for the companies that didn't retaliate, and I think we doubled down or something with China. China's the one that actually matters. All the other ones are like, they're just kind of peppered in there. And then there's China, the main one, the other biggest economy. So we could get a whole slew of things. Do they want to play ball? Do we have this let's see who's is bigger contest? What's really going on? I think what Trump's doing now is, look, I told you guys I'll play ball there, but you got 90 days to make negotiations. Now he's trying to make himself look like the good guy and make China look like the bad guy for not wanting to play ball. And who knows how that's going to pan out. That is the leading excuse right now. So any tweets or X posts, anything about that could send this market just as equally up or down. We could lose our minds. Tomorrow we have inflation data. So what's tomorrow? Thursday. So we have CPI, and then Friday we have PPI. Those are excuses. They'll move the market pre-market, and hopefully with any luck, that's all the volatility we have. That would be perfect. Anything extra on that, and it's get your poncho on. You're in the splash zone. No surprises. Anyway, I'll wrap up here. I'll keep you guys posted on my plays. If you're in the group, you guys should already know that. If you want to join, check it out. I encourage you. It's a great group. That being said, I look forward to seeing you guys tomorrow and just what else this stuff brings. Have a good one.